The global economy is on the edge of a new crisis, and many experts warn that a worldwide recession could be closer than expected. The collapse of the U.S. housing market, high central bank interest rates, and the growing U.S.-China trade war are creating a dangerous mix that analysts say pushes the risk of recession up to 80%. After years of fragile recovery from the pandemic, the situation now looks increasingly similar to 2008. Falling housing permits in the U.S. are considered one of the clearest signals of trouble ahead, while expensive loans caused by tight credit policy are limiting investment and forcing consumers to cut back on spending. Businesses, especially small and medium-sized ones, are struggling to access capital, which slows down growth and innovation. At the same time, the trade confrontation between Washington and Beijing continues to destabilize global markets, raising costs and disrupting supply chains worldwide. Leading voices are sounding the alarm. Ray Dalio warns that debt deficits and geopolitical instability could trigger a crisis worse than a typical recession. Kenneth Rogoff notes that collapsing consumer confidence and trade uncertainty may be even more dangerous than financial shocks. François Villeroy de Galhau stresses that if the U.S. economy falls into recession, Europe will inevitably feel the impact. Italian Prime Minister Giorgia Meloni warns that trade wars could drive Europe into stagnation and inflation. Economists outline several possible paths forward. The most likely is a slow economic slide with weak growth and possible recessions in individual countries. A sharper scenario, resembling the crash of 2008, could happen if multiple shocks hit at once. An optimistic outcome is still possible if central banks begin lowering interest rates and trade tensions ease, leading to a softer landing. The world is now at a crossroads. The lessons of 2008 show how dangerous it is to ignore warning signs. If policymakers manage to balance inflation control with economic growth and avoid escalating trade conflicts, the crisis could be softened or delayed. But the risks are undeniable. The global economy is once again standing on a fragile edge between stability and collapse.